Hey, what's going on, guys? So I want to do a quick video today about news and manipulation and things of that nature. I really try to focus on what's on chart, but I've had a few people reach out to me like, well, you say what you go off what's on chart, but you seem to know a lot about this Bitcoin ETF, and was that a factor? And you selling some BTC at 48 to 49 and things of that nature. So I'm gonna go over how I go about filtering out the news stories and trying to get to the bottom of it. So you let it aid you and not manipulate you, and from my Twitter page, January 4th, what I like to see is an ETF approval, pump off the news, which ultimately is a fake breakout, and sell off when trading goes live. January 6th, I think it could pump off the news and sell off some when the ETF trading actually opens up. January 7th, my best guess is ETF will get approved and then sell off once it starts trading. The market might sell off. When people ask me, that was my response, is what I kept saying. So we're going to talk about the ETF. We're going to talk about some other things that coming down the road, this market cycle, that are going to be narratives to watch out for. And now is the time to educate yourself about it. It's not a week before the ETF is going to be approved, scrambling, trying to figure out how all this stuff works. So being ahead of the game and educated on these stories will help you from getting manipulated, and it's going to help you out emotionally. Hey, what's going on, guys? So a good place to start is the infamous SEC tweet. There's a lot of theories I've seen about this. Some people were saying, well, maybe it was a scheduled at the wrong time and came out, but X did confirm that their Twitter account was hacked or whatever, or unauthorized login, whatever you want to call it. Some people saying Gary Gensler did it to make crypto look stupid. I don't know. I actually have a different theory on it, but everyone knows about this tweet. I think that where they came out and said the Bitcoin ETF was approved, and then ultimately it wasn't. And we're going to look at what happened on charts. So this is a small time frame, 5 minutes, and this is what I think was going on. All right, so look at the time of day this happened. It was at around 4 o'clock in the afternoon, New York time. And New York time is important because the New York Open is when you get the biggest market move. When it's like working hours in New York, that's when you get the biggest moves. And look, this happened right at 4 o'clock, like right when they're gone for the day, kind of. So my theory on this, just a theory, just having fun here. Was it manipulation? Well, if it was, I think it was manipulation in a different way than what people are saying. That this 5 minute candle, big bullish 5 minute candle, then the sell off. And I've seen smart people that I consider smart talking about, well, we can see a pump above 50K and on, because look at what happened in just a couple minutes when we thought the ETF was approved. So the time of day that would have had to happen, it had been a lot of retail buying and whatever, because a lot of these guys with the big pockets maybe weren't in front of their desk or computer or whatever. So my theory would actually be that if it was manipulation, something with Gary Gensler letting somebody log on and use the Twitter, whatever, if that was the case, that it was to make it look like it was going to be a huge pump off the announcement, and that really wasn't going to happen. People ask me, was familiarity with the ETF news a factor in selling 48 to 49? The only reason it was a factor is because I understood it wasn't going to be a big influx of money, that it's really more of an overtime thing, but I thought it would pump off the news. I will say I thought there would be a larger time between the gap and the approval and trading being started. But when the tickers are coming out, and it was like, so I had like maybe 2 weeks ago or something, I had said like 90% chance. And leading into that week, I was like 95+% chance it gets approved. So like that was the pump off the news. And then people keep asking the same question every day: sell the news event, sell the news event. When it wasn't pumping, then no. But then it did start to pump, and then you can make that case, and it was pumping into macro resistance. So you saw that 5 minute I just showed. All right, so this is when trading went live. It's approved or whatever in the first day. I mean, this is good breakout price action. These are good bull bars, on the 5 minute, but that is not what you saw. So, and this is the start of New York session here. So you saw that huge bar at 4 o'clock in the afternoon off of the tweet. But then when the big boys are in front of their desk and the trading's live and stuff like that, that's not what you saw. So if anything, if it was manipulation, then that would be my theory on it, that it was to make people think that it was going to pump above 48 to 50K and keep going and get people overly bullish about the ETF, if I had to guess. So I want to touch on this real quick, and it's about, and it's on the same topic about educating yourself about these things. So we're going to listen to what this smart guy said on YouTube on November 1st, when you came to like hearing these overly bullish narratives comparing the Bitcoin ETF to the gold ETF.
These market cycles. And to show you I'm not biased, because I'm going to save you some YouTuber hype. If the ETF gets approved, you're going to see, like, compared to the gold ETF and how it surged 350% after the ETF approval. That will not happen with Bitcoin. And I'm going to tell you why. It's not a one-to-one comparison as when the ETF for gold got approved. Because at that time, if you wanted access to gold, most people in the world, you had to buy physical gold. And that was kind of hard to do for a lot of people. And now, if you want Bitcoin, you can get Bitcoin. People don't have that same kind of problem. So do not expect that same. It is not the same thing at all. However, what it is doing is tapping into the biggest liquid market that's out there, the United States institutional market. And people start putting, I think, what you can expect to see, these bigger funds that have the ETFs, they'll offer a couple percent in the 401ks and RIA. That's what it's all about. It's not going to be this flood of money like it was with gold. It'll be a flood of money, or it should be. I hope it will be, but it's not going to be anything with gold. And that's why I'm telling you that right now, because I'm not biased about what I'm not saying it's gonna go to $1 million and all these things. I certainly try to look at both sides of the equation, and I think we're in the early stages of the bull market.
So that was a video I did on November 1st or whatever, talking about the gold, because you did start to see that as the ETF approach, like accounts on Twitter that have no clue what they're talking about, comparing it to gold and posting these graph comparisons. I knew it would come. I knew it would happen and stuff like that. So, another example of how educating yourself about it as those things approach, you're not taking in over too much data from people that don't know what they're talking about. So a good place to start when we talk about upcoming news stories is the ETH ETF. So when I first heard about the ETH ETF and knowing how long it took for the Bitcoin one, I honestly thought it was going to be something like a carrot they're going to hang in front of these donkeys' face all market cycle long to get them to bag hold at the end of the cycle. But now I'm not so sure. And this goes to looking into the story more. So, Larry Fink, obviously, he's been talking positive about crypto. I know some people say, well, that's manipulation or whatever. I mean, we can talk about that a little bit later. But so, I say it's a lot about like who's saying what and who doesn't like it and who does like it and all these points. So one thing's being reported is that, all right, so far, the only American regulator to assert that Ethereum is a security is an enforcement action is the New York Attorney General's office. And the New York Attorney General's office is very bearish on crypto in general. So as far as who's against this, you look for stuff that the New York Attorney General's office is saying. And now this is something you're going to see in a lot of articles. Bloomberg ETF analyst Eric Balkunis has pegged the odds of a spot ETH ETF by 70%. Once again, if you don't know who this person is, then you may just have that's manipulation. This person is lying. So we're going to come back to who he is in a minute. So let's look at another article about American Investment Bank says Ethereum ETF will be delayed. All right. Well, why do they say that? Well, they're basically saying because Gary Gensler isn't going to entertain eSpot to ETF unless the court enforces him to. And this article was just today. And then let's see who else we talked to. JP Morgan, who stated that there was a 50% chance. Well, thanks. My neighbor's dog could have told me that. So you don't know, 50%, maybe not. So, these guys are, who knows, don't disregard anything that they're saying about it. And then you're going to see this thing again about Eric Balkunis. So, you read these, get the bits and pieces that are relevant and go from there. All right, Ethereum ETFs pushed to May. The deadline is May. All right, so that person saying that Gary Gensler is going to have to be forced to. Well, to my understanding is that the BlackRock they're like ARC21 in this ETF, the ETH ETF thing. So where ARC21 had to be approved or denied by that ETF date, like January 10th or whatever it was, but they weren't going to let them front run everybody else. So BlackRock is actually the one that's in the front of the line for this. And I believe it's May 23rd, and then the rest are in July. But my understanding, somebody can correct me if I'm wrong in the comments, that is the no-go date for the ETH ETF, only a few months away. So you think it'd be a bigger story. And one of the things here that you're going to, what you're seeing on the negative side is that ETH could be classified as security. So hashtag Ether ETF aims to hold spot Ether future contract, while Grayscale's Ethereum futures ETF is seen as a Trojan horse that will corner the SEC into allowing Grayscale to convert its Ethereum trust to a spot ETF. So what this is referring to is that a lot of people say, well, you've already got a futures ETF for it, so therefore you cannot classify it as security. Now, that was some of the argument for Bitcoin. And I think that's why some of these analysts are thinking that the ETH one won't have as many hurdles because they had the futures ETF, and then court, that was one of the things that was cited for not being able to disapprove the Bitcoin one. And here you go again, ETFs now have a straight shot for approval. Once again, you see about Eric Balkunis. Put another way, the SEC is trying to provide guidance that would deter others from filing. You see this quote from him again. So like some people may be asking, well, who is this guy? Is he somebody that is some manipulator? Is he being paid to say this? Well, if you followed what he had said, so I'll go back to older tweets because forget what he's saying recently. But going into the ETF that week of, and like when I said 95%, he was also saying 95% as well. Back in June, he was like, 50% chance. This has been circulating lately about Larry Fink and this tokenization thing. I mean, he was posting this back in July. So from what I have seen, he is a trusted source. The things he had said about the Bitcoin ETF, I had always, it seemed to be pretty accurate as the story was unfolding. Now, that doesn't mean you take anything that he says as, infallible, but, he's built up some, credibility with me through that other story. So things that if he's saying 70% for the ETH ETF, he was saying 50% for the Bitcoin one, 6 months or so before. So he is somebody who most likely is in the know. Now, does that mean he's gonna be right this time? No, but you familiarize yourself with these people. And speaking of the New York, this is an article, the New York Attorney General's office. This is an article from May, sweeping crypto regulation. People I know in the States that live in New York, that they have the worst problems with regulation and getting crypto, fiat to crypto. So this is no surprise that the New York Attorney General's office is somebody that doesn't like this. But so you're seeing who some of the good guys are, who some of the bad guys are in this. So that's just a few points that I wanted to go over about the ETH ETF. All right, so let's talk a little bit about Vanguard now. So Vanguard is the one big guy who has been not embraced the ETF, at least publicly. Vanguard deep in anti-crypto stance. And I think there's a sense with most retail people that all these big hedge funds and stuff like that, they're out to manipulate the market and get your money and stuff. And don't get me wrong, that they do want your money and everything like that, but they're trying to get each other's money more than anything. We don't have deep enough pockets for these guys. I mean, who does? They look across the street and probably the people they go to lunch with or whatever, or their friends on another firm, they're plotting against them. So this article talks about, some of the Vanguard statements and Cathie Wood coming back, clapping back at them. And that's kind of what you expect to see for some of these things. I don't feel that they get together, those two got together and said, hey, let's say this for an article to come out and make people think a certain thing. I don't know what they would gain off of that. This talks about Vanguard and their statements to it on why they don't like the crypto and the ETF, because they didn't just not apply for the ETF once they went live. They yanked their futures ETF from their clients. So if you invest in Vanguard, you can't do any crypto stuff. So crypto is worthless, useless, speculative, blah, blah, blah. Does not align with its focus on asset classes such as equities, bonds, and cash. Some of the things that are said in this market, and other comments I've seen from Vanguard just saying it doesn't align with their strategies or their line, whatever. So some people, because you always hear BlackRock. All right, well, Vanguard is really big too. So this shows how Vanguard takes institutional lead over BlackRock. This was this past summer. And that's from like institutional funds being invested in them. I think when I had looked at this or read it, it was Vanguard had like 8, or BlackRock had like $8 trillion and some change under management. Vanguard had 7 trillion and some change under management. So they were pretty close to being equal, and shows that Vanguard took more institutional money with them at that time. That was about 6 months ago. But here's what some of Vanguard's public statements don't match some of their own investments. And this has been reported by a few people. Vanguard, they pointed out how they had this stake in MicroStrategy, about 8%. That's a pretty sizable holding in a company that basically, ties their company to Bitcoin. So this right here is who owns stock in BlackRock. So the number one private fund that owns stock in BlackRock is Vanguard, and that's another 8% of BlackRock. So BlackRock's been very pro crypto as of the last 6-8 months, whatever. So they own shares in MicroStrategy and BlackRock. So now Vanguard's investment in Bitcoin mining is not what it seems. Down here it talks about they have sizable holdings in Riot and Marathon. So they're also investing in miners. Now, also, who else could they invest in to get indirect exposure to crypto? Top 10 owners of Coinbase Global Inc. Vanguard, 7% stake. So, I don't know what to make of all this, other than that I don't think it's that Vanguard is overall bearish on crypto if their own holdings, sizable holdings, don't really reflect that themselves. I don't know if it's something like they're trying to not get people in, to front run people later on. I'm not going to look into it too much. It's kind of like Jamie Dimon. He says at certain times crypto's a scam, then it isn't, and stuff like that. So just be, careful of anything Vanguard says or does. You might want to, watch them or keep one eye. Just be familiar with what is going on with them and what they're saying, because I don't know what their angle is or anything like that. But like I said, you just want to familiarize yourself with these things and know what's going on. So in talking about stories and narratives to look through this market cycle, Argentina and the state of Bitcoin, I think this is one a lot of people may know, that they have a president now that got elected not too long ago that's pro Bitcoin. So, we've had, it's not legal tender there. It's legal tender in El Salvador, and I believe there's a smaller African country where it is as well. So, Argentinians will be able to legally transact in Bitcoin and stable coins very soon. And this is a guy who's, speaks for the president. And then a thing that's important here, some believe that South America's second largest economy adapts Bitcoin more extensively. It could catalyze increased global cryptocurrency exchange. So the second largest economy in South America, that's going to be a bigger, if that happens, that's going to be a much bigger than El Salvador or the other country, and I'm not saying that we're going to see this big flood of countries buying Bitcoin. I mean, we'll have to see. I'll tell you what, that'd be like the anti-Black Swan if that did happen, because governments, they have a lot of money. They can just do whatever. So they don't have to make good trading decisions. If it just becomes a thing and governments start throwing money at it, that'd be the best thing for us in the crypto market. I'm not saying that's going to happen. But just, this is something to keep an eye on, to know when these stories come out, what's real and what's not. So this is a video where, it's actually, I was watching it on my phone on a VPN and I could watch it. And then on here, I couldn't. So we don't need to watch the video, but it's a guy saying that in India, reporting that, it's logical that to think that it's going to be legal tender in Argentina as well. And I found it interesting that was blocked out where I live at in the United States. So Bitcoin as legal tender in Argentina, wishful thinking or logical conclusion. And this talks about, some of those things. And, I encourage people to read some of these articles itself. So we're in the second largest South American economy. Another article talking about, second largest economy in South America. Will they make it legal tender? So this is just an article about the 10 best countries for cryptocurrency in 2024. Argentina is actually not on this list. Another account that I've seen, Argentina was just outside the top 10. But what I did find interesting up here was Switzerland being in the top 5. It surprised me a little bit, but knowing that Switzerland's history with financial freedom, and I don't know, a lot of people, Swiss banks and money and stuff like that. If Switzerland, you get narratives about Switzerland making Bitcoin legal tender, or using it more, or whatever, that could be huge for this cycle, because there's so much money that flows through there. So, I just thought that was an interesting point, as well, as I was going through notes. All right, some other fun narratives you can look for this market cycle. Obviously, a good one they can always draw is USDT. A popular narrative that's people been in crypto a long time is China banning Bitcoin. It's almost like a joke now. So this is probably going to be like the new China banning Bitcoin thing, that when something always comes out with USDT. So if you Google what backs USDT, USDT is backed by real world assets such as fiat currency and US treasuries. There's a lot of stuff down here. So 58% US treasuries. I just found that that's interesting, that a lot of what backs it is them buying US treasuries, which that the US would want them to buy. Now, from all the thing, and I'm not going to get into a huge thing about USDT here. I do think that USDT is the biggest risk to like some kind of black swan for crypto. Now, there is a theory that if USDT depegs, all the places that you can change with fiat, that's going to be gone like that. All the other stables like USDC will be gone like that. And then what are people going to dump it in? They're going to dump it into Bitcoin as quick as they can. And that it'll make Bitcoin pump. I don't know. I mean, I understand the logic behind it, but I don't really think that's what you're going to see happen. If USDT were to crash, I think it would be catastrophic to the crypto market. But, I don't see that happening if it's backed by so much U.S. treasuries. Do I think that there is 60 something billion dollars backed by Tether? No, I do not. But this is the system that it is. I don't see it crashing right now. They're printing. I talked about that last video. But by educating yourself about such things, about this being backed by U.S. treasuries, means maybe the U.S. government doesn't hate it as much as maybe they may say at some points of this market cycle. Then you got, politicians like Elizabeth Warren. Then she's not the only one. And they'll say anything about whatever whoever pays them to say. So she'll say other tweets bearish about crypto. I would say, she may say some USDT stuff. She may say some things about altcoins being classified securities. I think you're going to see some of that this cycle as well. So, be ready for these things. You're gonna see such bearish narratives this cycle, regardless of how things ultimately pan out. All right, next big event that we're gonna talk about, that you're gonna see a lot of talk about, is the halving. Everyone loves the halving, right? The halving is the magical event that sparks off the bull market. There's a lot of smart people in crypto that say that's ambiguous. They don't know if it has more to do with global liquidity cycles, the U.S. election, whatever. A lot of bears say it's just been a coincidence, and this time you're going to see it's not going to matter. So, these same people that, as the halving approaches, were saying that the ETFs, a sell and news event, they're going to say the same thing about the halving. And the halving can actually be more difficult for you mentally, because you got this clock, this countdown right here, say it's 93 days right now. It's not like New Year's Eve, the clock's going to strike zero, the halving's going to happen, and the market's going to shoot off. I really don't see it that happening, but it does cut the supply, because all of Bitcoin is not a circulating supply. So more money has to come into Bitcoin for Bitcoin to hold that price. So I think it does matter. I think this is the last time that it's going to be a big significant cut in supply, unless Bitcoin through the next bear market, assuming things continue like they have and has another bull market, bear market, and Bitcoin had to hold a fairly high value for the halving to matter a whole lot, because the supply starts to get cut down more with each halving. So that's why some people, or myself, if the halving matters, and this could be the last time that it matters this much, I guess that's the best thing that I could say about it. But I do think the halving matters, and I think if people think it matters, then it'll matter. But I'm not sure. I think it can take some time after the halving to get the market going. after this ETF, it's going to be, markets need something to look forward to. The halving is the next big event, unless we get some kind of country adoption or something like that people be looking forward to. But that's still 3 months away. In crypto terms, that's like a year, and it truly is like a year, because it was like, if you look at the stock market that trades Monday through Friday, 5 days a week, if you look at that same trading time that would take place in Bitcoin over the next 93 days and compare it to the stock market, it is like a year's time in trading compared to the stock market. So a lot can happen in 93 days with Bitcoin. My personal opinion is the best possible situation that can happen for Bitcoin's overall health is that we range here until after the halving, in between, 46, 47 down to maybe even as low as 38.5, a wick down there, and clear the leverage. I'm not saying that's what's going to happen. I'm saying that would be the best case scenario for Bitcoin to range here, build up a really thick price history in the 40s, because it doesn't have an extensive price history in the 40s. And then you would have had Bitcoin ranging in the 20s, 30s, and 40s all on the way up. So range in the 40s and then break out to the upside sometime after the halving. I think that is the most bullish overall case for Bitcoin. Some people are calling the all-time highs before the halving. I don't know. We'll just have to see. I'll just look at the chart and see what it's giving me. I do think right now we're in going to be in a breather for Bitcoin after last weekly candle. But those are my thoughts on the halving, and you're definitely going to see narratives about it, and know that the halving, each block of Bitcoin produces a certain amount of Bitcoin, and every 4 years that gets cut in half. Like 19 of the 21 million or whatever already is in circulating supply, but the price of Bitcoin is so much more now that, and that's what the halving is and why it matters if you aren't familiar with it. So the last thing I want to finish the video up with, there's a book here, A Complete Guide to Volume Price Analysis by Anna Cooling. I'm not shilling the book. I'm not getting paid to say anything about the book, but there's a story in it that's really good about market manipulation. I'm not the only person that's read it and thought so. And this book, if you want to know more about volume and how it affects price, this is like the book to get. And so it's a very good book to have in your arsenal. But I'm going to paraphrase the story, so I don't sit here reading the whole thing, but people do find this as an interesting story, because most people feel like markets are manipulated by whales moving big sums of money around and pushing price around. I'm not saying that never happens, but generally, these guys are looking for an easy lunch, and they're trying to manipulate things with the news. So what the story is about is a guy said his Uncle Joe owns a unique company that sells widgets, and widgets is just a general term for whatever. And he says he runs a business and sells the widgets and makes a bit every transaction. It's kind of boring. And then, one day he thought, well, how he could make more money. And he told his neighbor, who was a gossip, that widgets were soon going to be in short supply. And he was hoping that he would tell other people and it would get around that the widgets were in short supply. And within like a week, people started to go to the store and buy his widgets at a greater volume of people. So then he was, making more money with widgets and stuff like that. And he said, well, I might as well raise the price, and people still think widgets are going to be scarce. So I'm going to raise the price of them. So he raised the price and people kept buying, and raised the price more. People kept buying. So he said some people went back to him wanting to sell the widgets back. So he said some of the smarter customers, like, they were fine. They could sell the widgets back to him more than they bought them for, which he was fine to do at the time because he still had plenty of people willing to pay top dollar for widgets. So as he noticed supply was getting lower, he raised the price again. And this is like the blow off top. So raised the price again to where people continued to buy and thought they were getting even more scarce. But then he noticed he's almost out of widgets. Like, now I really don't have much widgets left. So he started a rumor that another widget supplier was moving to town and that the market would soon be flooded with widgets. And, it wasn't true, but then it made people want to flock to him and sell their widgets back and start, lower prices and, falling all over each other, sell it back because they're worried about getting stuck with the widgets. And, eventually he bought all his widgets back for a much lower price. And so he took it easy for a couple months because he had made so much money that he could afford to do that. And that one day he thought to himself, I wonder if that would work again. So I always kept that story in mind when I think about what these market makers or whales are doing or thinking, or what's really going on. And other people have found that story useful as well. If you want to read it, it's on page 15 of this book, and I would recommend anybody who wants to learn more that this is a great book to check out. So anyway, thanks guys for watching to the end, and I'll catch you guys next time. Later.